Hello, today is February 5th, 2022. Let's start with our disclaimer, review our calls, and make some predictions for next week. This is my trading plan when the market reopens on Monday. Please remember I can be completely wrong and any trade should be at your own risk. Friday we looked for the pattern with the early low, which we got. And we said it tends to be a rally day with a high in the final hours, so that happened. We looked for a pattern Monday with an early high. This is a retrace which just gave back, just recovered 61.8% of the recent drop. It's not a very healthy place for the market to stall if you want higher prices. We do have a wall into the close, and there are two possibilities. One is we gap up, which can happen after a wall, or the other is this follows through on Monday, which is what typically happens after there's an established trend late on Friday. So we look for either following through or gapping up smartly. Now, we did say that after Thursday, that there was no requirement to trade lower, but we usually would. And we also said that there was no requirement to overtake this high, but we usually did. So those things happen. During the day, we got an ultimate buy signal and a buy signal plus an optional lower target. We got the lower target, and these buy signals eventually worked. This move up here was said to retrace. It was false. This drop was said to be false, would retrace, and those have already played out. Well, a wall into the close usually represents panic selling by the amateurs. Certainly it's not typical of institutional action. I don't know why the amateurs would be panicking here. The market was going up all day. It's entirely possible this was just short covering, and when the people covering shorts disappeared, there was no one left to buy stock. That could still gap up. This here happens to be, that's not the chart I wanted to show, happens to be a 38.2% retraced of the recent drop. It's also a 200-day moving average. That was at Friday's low, so there could be a recovery, but everything else is pointing in the other direction. It is possible to count an ABC up, which could be the end of black B or just A of B. And if you look at here, here is your ABC up. You can count an A down with good fibs, B up with good fibs, and this could be A of B. You could have ABC, or this whole A of C could be A of B, but there's a clear 5 waves up, and you've got good fibs all the way around, and it stopped right on a dime. So if we do continue down, there certainly is a logical way to explain things. When this pattern doesn't close near its high with this low to high pattern, it does tend to lead to lower prices. The only way that wouldn't happen is if we gapped over this high, or at least gapped up and overtook the high promptly. If that doesn't happen, we should see lower prices. Well, that's kind of annoying. Okay, Monday's pattern has the early high. We could still gap down. We had a wall into the close, so it's always possible we could gap up Monday, but unless that happens, the pattern's pretty weak. Friday's pattern normally is bullish, closes near its high. When it's weak instead, more weakness tends to follow. The decline into the close on the Friday nearly always follows through on Monday. The high was a 61.8% retrace of the recent drop. It completed the clear 5 waves up. If we gap Monday and promptly overtook Friday's high, would kill the pattern, but as of now that doesn't happen. I look for lower prices when the market reopens. These are my calls for the patterns we'll have for next week's action. So this week looks pretty weak to me. We could still kill the whole idea by gapping over this high. But if that doesn't happen, we should be starting another leg down. And that's today's call.